About 20 years ago, some odd years ago, employees at my research firm, wstreet.com, bought me this beautiful sterling silver model of Cepheus. Now, if you remember, he was the cleverest, most cunning mortal alive in Greek mythology, and he had this task of rolling a boulder up a giant hill every day. Of course, it would roll back overnight, and Cepheus would be back at it again because, well, he offended the gods. My next guest references the story of the king of Corinth, who again angered the gods, and somehow, maybe Besant, maybe reincarnation. I want to bring in Macro Mavens, the founder and president, Stephanie Pomboy. Stephanie, so you wrote in this piece that yield curve control is inevitable. Now, listen, it's been used before. The question is, why, when people talk about it, everyone sort of freaks out?
Well, I mean, generally, you don't want to get into a situation where you have to manipulate the markets, which is what yield curve control is. I mean, I happen to strongly agree with Warsh's general bias and one that was echoed by Stan Druckenmiller in his op-ed the other day, that the market should set the price, not policymakers. So I guess that's why there's a stigma to it. It's a statement about the fundamentals, and
Right.
the problem for Sisyphus and the problem for Besant is that they are both fighting the fundamentals. In Sisyphus's case, he was fighting the force of gravity, and in Besant's case, he's fighting the bond vigilantes, who I think have it right that a $40 trillion debt that is completely out of control and shows no signs of ever coming under control is one that demands a higher, you know, risk premium in treasuries.
Right. So in other words, let the markets do what they're designed to do, even if it may be painful. I saw a great piece from Centrini Research, and I want to kind of share it with you in the audience and get your thoughts on it. Essentially, they're talking about a tie-up between the Besant Treasury and the Warsh Fed. And so for folks at home, first you rewrite the rules, right? And then you start to put those rules to work. That's steps 1 and 2. Steps 3 and 4 essentially is the Fed starts to, remake itself. It starts to, the mix of what it buys changes a big time. And then, of course, the Treasury does a remix as well, along with the use of bank stable coins and the Fed. And the focus is sort of on T-bills. And ultimately what they say is that the result of this is you'll get, we're going to bring up, essentially, you'll get a balance sheet that's smaller, market duration that's lower, credit capacity that's higher. Does something like that sound feasible to you?
Well, it's very complex and requires a lot of moving parts, and none of that inspires great confidence on my behalf. I mean, clearly, the whole objective here is to generate as much demand for short-term paper via uh, the Fed currently buying 40 billion a year of T-bills, which pretty much everyone seems to ignore, that they are doing QE. They're doing 40 billion a month
Right.
in T-bill purchases, while the administration is very aggressively pushing these stablecoin funds, which function as glorified money market funds. So it also creates demand for short-term paper. And the idea is that Besant can therefore shift issuance to the front end of the yield curve, which has been in place since Janet Yellen back in 2015, and then slowly start to pull down issuance at the long end. And these buyback programs are designed to help accelerate that. But ultimately, relying on T-bill issuance to fund our massive debt and deficit seems like a fairly high-risk gambit, and we're discovering why now. I mean, we've got oil prices over $80 a barrel. That's kind of tying Warsh's hands at the Fed in terms of being able to lower interest rates because it's keeping inflation pressures sort of elevated.
Hmm.
So that's not bringing down borrowing costs either. I mean, generally, I don't really love the plan of relying on T-bills to fund our deficits. And neither, by the way, did Scott Bessent for years prior to becoming the Treasury Secretary. And then I think once he sat down behind the desk and surveyed the situation, he concluded there really wasn't any other option right now. So this is the best we got, but it's hardly confidence inspiring.
Well, speaking of confidence inspiring, what are you anticipating tomorrow? Because Warsh is under a serious microscope.
Yeah. Well, I think one thing he's made clear is that he's not a fan of very clear communication. I think we're going back to the era of Alan Greenspan, where if you understood what he said, you weren't paying attention. So I suspect that, anything that he says that actually is clear cut will be to underscore the Fed's commitment to bringing inflation finally back into its target.
How do we
And
measure
to
the target, Stephanie? How does he want us to measure that target? How do
That's
we
a
measure
very good question.
2%? Because it's not he doesn't want to use the PCE, right? So how do we
Yeah, no.
determine where inflation is to begin with?
Well, I think that's what some of these task force that he's developed are charged with figuring out. What is the best way to measure inflation? I happen to think the price of gold is the best way to measure inflation through the purchasing power of the dollar. So that would be my
Right.
preference. But we'll see if he gives us any insight on that. By the way, since I did create a little segue into gold, I would argue that if Scott Bessent really wants to have some firepower with which to buy back long dated treasuries, we talked about this TGA, the
Right.
Treasury General Account, which is around $1 trillion, but that's just a checking account. That money is obligated. Obviously, we have a $2 trillion deficit. The Treasury doesn't have some secret $1 trillion slush fund, so that money is just there 1 minute, gone the next. But he could have $1 trillion slush fund if he just simply marked the U.S. gold reserve today to its current
Right.
price.
Right.
Right now it's $42 an ounce in their accounting. If they just marked it to $4,000 an ounce, he'd have $1 trillion with
Yeah.
which to buy back long dated paper.
You know,
So I expect that thesis might get a little bit more play
right.
in the coming weeks and months. And remember, you heard it here first,
All right,
Charles.
and let me tell you something. If I'm CFIUS, I'm looking for anything to help me keep that rock up that hill, even momentarily. Stephanie, great stuff. I'll be thinking about you doing that speech tomorrow.
Thanks,
All right,
Charles.
see you soon. Thanks a lot.